It's great to have you here on the Clark Howard Show. You know, our mission is to serve you with advice and information that empowers you so you can make better financial decisions in your life. I hope you started out this week by reading our daily newsletter from the team at Clark.com. We've recently made additions to it, like daily stats that I really enjoy seeing in my inbox. To subscribe, so easy. Just go to Clark.com/newsletter. And you know what? This is important about what I'm going to talk about straight ahead. We make it really easy to sign up. Do you know we make it as equally easy if you say, I don't like this thing, to unsubscribe? As simple to cancel as it is to sign up. And later, because I'm going to talk about that straight ahead, and later, I've got a homework assignment for you. Some good news for you on tax reporting changes. It's good stuff. Okay. So I was all excited I think it's last year, when it was initially announced we were going to have a new rule going into effect this summer that would require that companies could no longer play you like a fiddle when they'd have a trial period or you sign up for something and then you want to quit later, whatever it is, a gym membership or a video streaming service, whatever it is, that however you were able to sign up, you would also be able to quit the same way. Well, let me tell you, companies large and small went berserk, lawyered up, and just before the new rules on canceling were going into effect, a 3-judge panel in an appellate court said, nope, this interferes too much with business. So businesses are still going to be able to lure you in with an easy sign up for something and make it as difficult to near impossible for you to cancel it as possible. Let me tell you some of the industries that are the worst offenders of this. For years and years and years and years, it's been the home security industry. Makes it really easy for you to sign up, makes it nearly impossible for you to quit. They will have rules in those long-term home security contracts that require on a set day, after so many years in a contract, you must send them a letter by registered mail. Nobody even knows what registered mail is. But you have to send a registered letter saying you want to cancel, or else it does what's known as an automatic rollover for another 3, 4, 5 years. Gym memberships do all kinds of funky stuff like that. And don't get me started with the streaming services that make it so easy for you to sign up for a 6-month thing at so many cents a month or just a few dollars a month. And then at that 6 months, bam, suddenly you're paying a huge amount of money and you can't even figure out how to cancel the stupid thing. You know, this is a true lack of business ethics. And it is people afraid that the product or service they're offering, well, I wouldn't in my right mind keep doing it. So why would they? So you put up roadblocks to make it as difficult as possible. So anytime you sign up for any subscription of any kind, I want you, before you click to sign up for it, I want you to know, how do you get out of it first? When you don't want to be in it anymore, how do you do it? Because it's a lot easier for you to get into it than it is to get out of it. And I'm sure the judges in their infinite wisdom thought they were doing the right thing, but it sure is a terrible thing for the American people.
And whenever I sign up for a subscription, I'll put it on my calendar like a week before it's going to renew. I put that on my calendar so I know to cancel if I want to cancel it.
Have you ever had one that was just like crazy hard to get out of?
Oh, yeah. I mean, just to find it. I mean, I just had that recently and I was looking through the website. It's always so hard. Half the time I end up just searching, or it'll be at the bottom of the FAQs. How do I cancel? It's annoying. Okay. Here we go with some questions. This one came in from Kathy in Georgia. My salary is variable, and this year it's significantly down.
I'm sorry about that.
My spouse and I are spending more money than we earn. Every month, I'm transferring savings into our checking to cover the overage. Ooh. Because using cash is troublesome, what is the best way to get prepaid debit cards and load them up to use? I don't want to use our bank debit card because we both might not be aware of what the other is spending, and we risk fees for overdrawing our account. Are there any pitfalls to consider before going this route? I'm at my wit's end because just saying we need to spend less is not working. I already use a budgeting app, but I'm not crazy about it. Help.
So, Kathy, I'm really sorry. I'm sorry about the decline in income. I'm sorry that things feel out of control right now. So you said using cash is troublesome. I will tell you, historically, I've found that when couples face the situation you're in, that actually cash has historically been the best way to get spending under control. Because what you do is you allocate to each of you an amount of cash every week or every pay period or once a month or whatever, and you each individually and collectively, you have to live within that cash you've taken out. I've seen it worked miraculously. There's something about pulling out plastic that doesn't feel the same with spending, and it feels psychologically almost like a bottomless pit of money, where obviously there's not a bottomless pit of money. So that's why I would ask you, Kathy, to rethink this thing of not wanting to do cash. I'd much rather you and your spouse sit down, you agree that this is how much money you're going to pull out, and that you'll probably see, like so many people do, that as the amount of cash dwindles, you think, do I really need this? Do I really need that? And stick to the needs more than the wants. Please try it. Now, if that's falling on deaf ears and you need to do it the way you talked about with some form of card, what I would recommend is you set up a separate account with an online bank. You transfer money to it each period that you're going to transfer money. Do not set up overdraft like you talked about with the fees with that. When that card no longer will tap because you're out of money, then you know you're out of money to spend in that time period till you replenish it with additional money on whatever schedule the two of you agree upon.
You can also set daily limits. I don't know if you can set weekly limits on debit cards, but I know daily limits of how much you can spend for each debit card. So that's another thought. Maybe that'll work.
I know it sounds like I'm as analog as could be, because I don't actually use cash regularly. But I've found that for people who are trying to get control of spending, that going back to the analog era, the cash era, does make a huge difference.
Some places won't take cash now, though. So.
That is true.
Julie in Rhode Island says, I just started listening to your podcast and I appreciate all your tips. My credit score is currently 730, but I'm wondering how I can raise my score. I have 2 major credit cards and 2 store cards that are active but with no balance. As much as I want to close them, I took your advice and kept them open so it doesn't adversely affect my score. I did take out a bank loan for $12,000 for 3 years to consolidate the high-interest debt from my credit cards, and I pay bi-weekly on that. My car is paid off, and besides normal bills and rent, I have no other debt. Thank you for any advice you can give me.
So, first of all, great. I'm happy with everything you said, and you want to get that score up, Julie. So you're not alone. We have a briefing at Clark.com, how to take your score from good, which yours is, to exceptional. And I think it would be good for you to go read that briefing to try to figure that out. But I also love for you to sign up for a Credit Karma account. If you sign up for Credit Karma, it has a number of tools that will walk you through what are the things you can do in your exact situation where your score is now to raise it up to where you want it to be, which is you go from where you've got a really good score now at 730, outstanding, depending on the lender, would be considered to be golden, is 760 or 780, depending on their underwriting standards. And by the way, credit scores move around more than you might imagine, even in the same week. But it's the trend that you want to make your friend going up. So I'd say you read, to get the waterfront view, read my briefing that we've got at clark.com, but also set up that Credit Karma. If you have your credit frozen, you'll have to temporarily thaw it to set up the Credit Karma dashboard, then let it go back to frozen, and you'll be able to see what you need to do step by step to get that score where you want it.
And this is from Janet in Illinois. I bought a mini fridge on Amazon. I recently received a notice that it was on recall for causing fires.
Oh, my
The notice
goodness.
said to send a picture of the fridge with recalled written on it, and I would get a new refrigerator. I did so. I was then notified it would take a minimum of 5 weeks to get a new one, and it would be a random color. When I told the company this was unacceptable, I was told it was the only option.
Oh, come on.
I asked for my money back and was refused. Do I have any recourse at all? I use this product on my job where I keep cold sodas for people with autism as a reward for having a good day. They find this more than a little inconvenient. And I am disgusted that their poor workmanship is now my problem. I love the show and thanks for all you do.
First of all, I love how you're using this, Janet. Mm-hmm. This is really awesome. It's absolutely terrible that you're being treated this way on this recall. And you said you bought it on Amazon, but obviously it was a third-party seller. I want you to work hard with Amazon customer no service to... Well, they are customer no service now. Amazon used to be...
It just doesn't sound very encouraging. Like, I want you to work with customer no service.
Well, you got to push them.
I know.
You got to push them because this is not acceptable. This is a fire risk. So you're left with the choice. Do you have a refrigerator for these kids or you don't? And getting a refund on it is what Amazon should be doing. Amazon loves to play this game. Sorry I pick on Amazon so much, but they're not who they used to be.
It's fine.
So Amazon likes to be, we're Amazon. We're here for you. We do this for you. And then you have a problem. They say, oh, no, that's a third-party seller. Oh, no, that's not us. Come on. Come on. Step up to the plate. Take care of these autistic children right now, Amazon. I want you to do the right thing. What do you think? Think we'll hear from somebody from Amazon wants to get a refrigerator to these kids?
Fingers crossed, for sure.
All right, I'll tell you what. Janet, I love what you're doing here. If Amazon customer no service doesn't take care of those kids, I will get a new refrigerator for these kids.
I love it.
I will, because this kind of thing just annoys me no end. You got a fire risk there. You have such a key reason you're using this refrigerator, and they're telling you, take it or leave it. This is how it's going to work. I don't like that. So let us know. I mean, a refrigerator can't be that much, right?
We'll see. It's for the kids.
Yeah, it's for the kids. We'll see whether I'm buying a new refrigerator or not. So you got to work with Amazon customer no service. Oh, boy. Coming up ahead, we had a flurry of activity early this year and late last year from people who were just so upset about new IRS reporting requirements when you use payment apps. I want to talk to you about how that's going to work from here forward. All right, I want to give you an update on what's going on with all those crazy tax forms that people were freaking out about, that people were going to receive, a form of a 1099 who received money from others in excess of $600 over the course of a year from Venmo, PayPal, Cash App, Big Bad Zelle, any of those, that this was an accounting nightmare. And at the last minute, the last couple of tax years, the IRS delayed, suspended the new requirements. And this was a requirement that Congress had passed a few years ago. And then this year they were like, oops. And a new provision was passed that all it did was roll back things to the way they used to be, which is you will receive a version of a 1099 if you on the payment platforms receive more than 20 grand in a year. You're just automatically assumed at that point to be engaged in some kind of business activity. There's also another threshold you could hit even at a lower amount than 20,000, and that's if you have 200 or more transactions a year. A lot of us who are landlords, I'm a landlord, receive rent now from our tenants through one of the payment apps. So depending on how much the rent is, odds are very likely at what rents are in most of the country, you're going to blow past that $20,000 limit. That is not a problem for you as a landlord when you'll get that 1099, because all you're going to do, you're already required to report that income on your rents, royalties, whatever part of your tax return, and you'll reflect that 1099 there, and then you'll back it out versus your expenses and all the other stuff. It will be no significant, meaningful change for you. The whole purpose of this that Congress has been fumbling over for years is there are a lot of people running a side business that maybe they used to do in cash, but because so few people carry cash anymore, a la conversation we just had earlier, that people are now, with the apps, paying for stuff. And so you running a little side thing, may have been just pocketing that money and not reporting the income from your little side gig. That's why Congress put these requirements in place to be able to capture more tax revenue. Well, it turned out it was very intrusive. People obviously hated it. I can tell you from the responses we got the last couple of years, people really do hate this. And so that's why Congress said we give up and went back to the old system. So again, 200 transactions with one of the payment apps, more than $20,000 in a year. Either of those triggers the 1099. Now, the other thing is that if you're doing work for a company, the requirement that they issue you 1099 has been $600 in earnings in a year for as long as I can remember. That's now $2,000. So a lot of people do just a little bit of work somewhere will no longer receive a 1099. The 2,000 is base. As inflation happens over the years, that will automatically reset each year. So there'll be less of a blizzard of paperwork for a lot of us.
All right, we'll go to questions. Tyler in New Jersey wrote this one. I am a college student who has used your advice to finally start saving for my future. Finally. That's funny. He was in college.
College student.
My question is, what are your thoughts on Charles Schwab's futures trading accounts and their Thinkorswim AI? Is it the next big thing or a waste of money? P.S. My accounting professor is in love with your podcast. It will mean a lot if you could shout out Mr. Ledgerwood from Embry-Riddle.
Embry-Riddle. We went to look at Embry-Riddle for my son when he was trying to decide what flight school he was going to go to. And it's a cool campus.
Well, Mr. Ledgerwood is a cool professor. So thank you for listening.
Cool professor, Mr. Ledgerwood. This is for your student, Tyler, and Tyler is from the tri-state area, just
Yes.
like you in New Jersey. So, all right. What's Schwab doing here? They're trying to be cool and hip towards younger investors like you have with Robinhood, and Fidelity's been really into this as well. So futures trading is something that I don't recommend for a mainstream investor. It's futures trading is a very, very high risk, potential high reward thing that most of what we've heard from listeners and viewers is when they got burned in it. And using AI for investing. So I am as opposite this kind of thing going on at Robinhood and Fidelity and now at Schwab, because I believe, Tyler, first of all, you said you're finally taking advice. Let me tell you something. If you're in college and you're already thinking of how to invest, that's the biggest part of the game. So my deal is something that Chuck Schwab himself talked about, decades ago. You always start with the core. The core is that your initial investing and what you should be doing is plain vanilla Dullsville, that you want to set up as soon as you're working your own Roth IRA. You want to do the money in that as dull as you can, likely just doing a target retirement fund year 20, if you're in college, 2070, 2075, something like that. Yeah, I know that's a ways away. And building that money for the long term, and just that's where you start. And then if you want on the side to do some pretty active kind of trading, fine. Know that if you do it in a traditional investment account and you're doing holdings of less than a year, the tax treatment on that is extremely mean-spirited and unfavorable.
George in Arizona says, today I logged into my Chase account with a new computer. After the usual username, password, and text code, I was forced to call an automated line. On the call, I had to enter my full credit card number, enter my full social security number, and speak my full name and address into the phone. This felt excessive and invasive, almost like a scam. Is this becoming standard practice among banks?
George, my experience from my own experience with Chase and what I'm hearing from others, they are more aggressive about security than is typical in the banking industry. They're by far the largest bank. They truly don't know their customers. And so they are putting so many roadblocks in. The second let's say you get a new cell phone, and you used to sign in from the old cell phone, or you get a new computer and it's different than the one you were signing in before. They put you through so much verification. Often you'll have to not even go through automation. You'll have to talk to a human. And one thing I do recommend, if you trip the security tripwires at Chase, that you don't enter all that information in an automated system. Wait to talk to a representative. They may be able to verify you without as much specific and invasive information as you were asked for by the automated system at Chase.
But caution to people, though, like I wouldn't just, you got to double check that you've gone to the right website.
Right.
Because people will absolutely spoof this. It sounds like George got he said the text, so I assume someone so Chase must have sent a text to his phone number, which, the crook, if it was a crook, they wouldn't have his phone number.
Right.
So that probably triggered the fact that this was a legitimate call that George had to make. I don't know, just scary for sure to think of giving that information on a phone line.
But, on your Chase statement, if you get paper statements, on an online statement, on the back of a Chase credit card, it will have the number you call for customer no service. And by the way, every company today baseline is customer no service. You got to work up from there. But the Chase, you just talked about us not trusting
right
who you're reaching, and they're not trusting you. This goes back to a core principle of the financial services industry that was long-standing, and that is there was the know thy customer rule. Well, today we don't deal with local people at a local bank that they know you, they know your kids, you know them. It's so impersonal now, and that's why these verifications are so important to make sure that you are who you say you are. But as Christa points out, and it's so important what you said, that you're not being spoofed and scammed by crooks.
Right. Because it sounds like Chase sent a specific number of verification line, and so it might not have been. I'm sure it wasn't the traditional number that you could find online or on your card.
But so if you called your card,
right, just to ask, do you do this process? Is this what's happening to me? I guess
they would transfer you to that department.
I don't know. Maybe I'm paranoid because of my job.
Because of everything we hear. Mm-hmm. We hear. All right, we are basically the most paranoid people ever when it comes to the financial services industry, because we have heard every scam there is out there, and we see over and over again where the banks and the brokerages, they just wash their hands of it, say, yeah, that's your problem, not ours.
Okay, T in the District of Columbia says, I'm a 57-year-old single woman and a newly retired federal employee. I have a decent annuity and a modest nest egg, but I am by no means rich. I have no debt, but I'm living in D.C. I also have no car or house. I'm considering purchasing a villa. Which would effectively be a 15-year lease. I realize this company is a startup and could be a bit of a gamble. As someone who has worked very hard but not indulged in much international travel, I would love to take this chance to see the world, around the world to big ports and small ports in 3.5 years. I have done quite a bit of research, but I am interested in hearing your thoughts. I don't have unlimited funds, and this purchase would take about half of my retirement savings.
Oh, my goodness.
To purchase the package, which is all-inclusive and would allow me to save or reinvest part of my monthly annuity payment for the 15 years above board the ship. Thank you for your show. I've discovered you on YouTube in the last 6 months and have studied retiring.
Well, T, congratulations on being retired at such a wonderful young age, 57. I mean, a lot of people don't even know when they're ever going to be able to retire. So I don't want you to end up saying, oh, man, I'm having to go back to work because. I want to tell you that this has been a trouble-prone area where people buy, or in your case, lease, a multi-year cabin on a ship that a lot of these, couldn't say haven't gotten off the ground. A lot of these have had a lot of trouble launching, staying underway, keeping it going. The economics have been very challenging for them, and then brutal for people who pay a lot of money up front, and then the thing goes, it doesn't happen. Trying to figure out how to say this. So I'm not comfortable with you taking so much of your money, and as you put it, you called it a bit of a gamble. I'd say it's a bigger than bit of a gamble. Besides, if you book cruise cabins and you book them when they're on sale, like at Cruise Compete or at various websites where you can find really affordable cabins, you can effectively, as many other Americans are doing, live on ships or even one particular ship for an extended period of time. You'll be able to see, is this a life that works for you? You'll be amazed how affordable it will be, especially if you're willing to live in an inside cabin. It is crazy cheap for you to live week after week, month after month on a ship where you get your housing, you get your meals, you get to see so many things. I don't like the idea of you effectively entering this 15-year lease because there's just too many potential risks involved with it for you. I don't want you to have worked so hard for so long to put what you've worked so hard to save for your future at risk like this. So I'm sorry. I hope you have an absolutely great day. I want to thank you for joining us, and know all week long we have one-on-one free advice for you available from our Team Clark Consumer Action Center. If you go to clark.com/CAC, you'll see how to get that. And I want to tell you, our goal is to provide you knowledge, information, empowerment every way we can think of, everywhere you want to be reached, whether it's social media, our websites, the markets that I'm on TV and radio, wherever it is that we can serve you to give you the knowledge, the confidence, so you can make good decisions with your wallet, so you can save more, spend less, and avoid getting ripped off. And we'll be at your service on Wednesday.